To Daily Rates Live with the Mortgage Calculator. Today we're going to go through some live mortgage rates and then we're going to do a deep dive into 0% down loans. We will wait just a minute though to get started here. Just let us go live on all the different platforms. We put the chat up on the screen, so feel free to drop a comment here as you tune in. Thank you for those that are already commenting. I see some people tuning in nice and early. Appreciate it. We'll get started here in just a moment. Hope everybody had a great holiday weekend. Ready to get back into it here. And we will get started momentarily. All right. Thank you for the comments there. Annette, Adam, Warren, Gerardo. All right. Some more comments coming in. Thank you. Thank you. Thank you. So we'll get it started here, but feel free to keep dropping comments there in the chat and also drop any questions you have in the chat when we go into our deep dive topic. But looks like we are live on all the different platforms, so we can go ahead and get started. All right, welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do every morning on this show is go through the live mortgage rates for today, and then we do a deep dive into a different loan type. Today's deep dive topic is going to be 0% down loans. Sounds pretty interesting, right? Is that something you might be interested in? 0% down. So our sales manager, Jose Gonzalez, with 28 years of experience as a loan officer and a realtor, is going to be talking about 0% down loan options here momentarily. But before we do that, we'll do what we do every day, which is pull up our pricing tool and go through the live mortgage rates. So Nick, if you're ready, let's go ahead and pull up our pricing tool and see what the interest rates are looking like this morning.
All right. Switch my screen and we will check it out. So here is our pricing tool for our team of mortgage professionals. This will show us the general rates and the APR. For today, it is Monday, November 13th. Most of our programs are live here. It is just after 11 a.m. Eastern, and we will continue to roll out pricing throughout the week. If you'd like a full breakdown of all the fees that go into the APR, please get with one of our team members. We have over 400 licensed loan officers in 24 states. So for our demo, as we do every day, we'll set up a basic scenario to compare across the programs. So we'll set up a $400,000 loan amount. We'll set the LTV to 80% loan, 20% down payment. And we're going to search for the lowest rate options today for our conforming. Then we'll check out FHA. And then we'll go into expanded guidelines, also known as non-QM, where we have over 5,000 additional loan programs beyond the standard here. We also have VA and USDA, which will definitely be discussed today, but those are only for eligible borrowers. For VA, only for eligible active service members and veterans. If you are eligible, let us know. And we do go over some of those quotes like we will today. And USDA is only for eligible properties. So if you do happen to be looking at one of those, just let us know. We can quote it. And Jose will probably have some examples today as well. We'll start with conforming as we do every day. We'll do a purchase, 30-year fixed standard loan, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated credit score of 760 and an estimated debt to income ratio of 40. So with these basic settings as we do every morning, let's check out the rates today. All right, looks like the option at the top here, 7.125 rate, 2.375 discount points, puts the final APR 7.338. So definitely lower than the 8 APR we were approaching a couple weeks ago there. So all of our customers that are out there shopping definitely take advantage of the recent downward momentum. Now, if our customer for any reason doesn't qualify for conventional, the next option we want to compare with the same exact settings is an FHA option. So FHA does allow more leniency on credit issues, as well as a much higher debt to income ratio, but we'll keep everything exactly the same so we can compare apples to apples across the programs and compare the APR. So for FHA this morning, looks like the best option, 6.375 rate, 2.5 discount points in cost, puts the final APR just a touch above 7 at 7.018. So as usual, for our customers that qualify for both conventional and FHA, definitely don't overlook FHA. It might actually be cheaper. This APR does include the upfront and yearly mortgage insurance that is required. So definitely a good option now with FHA there. And if our customer for any reason doesn't qualify for FHA or conventional, unfortunately, many other banks or lenders have to deny that borrower, but that's where we love to present our non-Q expanded guidelines here. This is where we have over 5,000 additional options beyond the standard. So when we select this, everything else will stay exactly the same. However, we can choose a new income option with our non-QM programs. So full doc is what we use for conventional and FHA. That's 2 years of tax returns, what most people are used to. So we'll typically choose a non-QM option to take advantage of one of these alternates. We've done shows on all of these different types. Please check out some of the past episodes if you want to go into a deep dive there. We have asset-related programs, business bank statement programs, our investor programs are just for investment properties. So we'll pull those up in a minute. Personal bank statement 12-month is the most popular. We also have RSU, stated income, VOE, 1099, P&L, and no income CDFI. Most popular option here is the 12-month personal bank statement. That's for our self-employed borrowers. Many times it's our self-employed borrowers have various issues with their tax return that may cause them to not qualify or just may cause them to not quite have as much income as they really need. So we will solve that problem for our borrowers here. No tax returns at all, just their last 12 bank statements to determine a debt-to-income ratio of 40% in this demo here, using no tax returns at all, just the cash in the bank. Many times our self-employed borrowers will qualify for much more income and can therefore get the loan they really want. So let's check out the bank statement options this morning. All right, this one is a little costly, but it probably still works. 7.5 rate for 3.25 discount points and costs, but the APR is good. Final APR puts it at 7.642. So a good option here, about 0.3 higher than conventional. Most of our borrowers that need to use this program will definitely like that the non-QM rates are almost identical to conventional now. And there's a ton of different options here if you scroll down that use alternative income. Some of these options may allow bankruptcies, foreclosures, other issues, and some of these options at little higher costs and rates may also allow different ways to calculate the income. So there's hundreds of different variations here. Please get with our team. They will find the one that fits best. And for our final pricing demos, we always want to price some investment properties. We love to work with investors, new investors, seasoned investors. We have some good options here. So we'll pull up the LTV to 80% loan, 20% down payment as usual. And we'll compare our best rate option for conforming. Jump the gun there. Come on. Didn't finish setting it up. So we'll do our investment property, 96.5. And we'll compare conforming conventional with expanded guidelines, also known as non-QM. So first we'll set conforming conventional. Everything will stay the same as our other demos here. All we've done is edited the occupancy to investment. So now we can see the adjustments for conventional. And portfolio option is back on top. So as we have a little bit of volatility, as I say every day, this option is good. We have this portfolio option that takes the same underwriting, but is not technically Fannie or Freddie. So when Fannie or Freddie do have a little bit of volatility, this program stays nice and steady. So that's why you see it almost identical to the rates it was last week, whereas the conventional has gone up here. So portfolio option is the best today. Last week it wasn't every day. It was a couple days. So keep an eyeball on this. 7.75 rate, 3.25 discount points and costs. But the final APR just a touch below 8, 7.992. The best true conventional option here with all the investment adjustments that they've had. 7.875 rate, 3.375 discount points. pushes the final APR just a touch above 8.121. So this is our true conventional option, and this portfolio option, keep an eyeball on. It does not vary as much, so you see more of a steady line there on the program. Now, we'll go back to our final demo here to compare our non-QM options. So we'll set up the same exact scenario, and this time we'll select our expanded guidelines, also known as non-QM, for investment property. Now, first thing we must select is the income. The most popular income for investments by far is going to be our DSCR option. It's because it doesn't require any income or employment documentation from our borrower. We simply use the estimated rental income to find a DSCR value. If the estimated rents can cover the PITIA of the mortgage, the debt service coverage ratio value here is greater than 1, aka the property cash flows monthly. If the property doesn't quite cash flow monthly, that's a ratio under 1.0. For the demo, we always put 1.5, which is the highest the computer accepts so that we can see all the programs. And finally, prepayment penalty must be selected for non-QM investment properties. We can select 0, that will limit the loan programs that show up and cost more. We can also select 5 years, which will cost less but limit the loan programs. 3 years is the most common. That's what we use for the demo here, so we can see all the most common options pop up. So let's check out the DSCR rates today. All right, DSCR 2 options. I can't quite remember, maybe even 3 options here are beating conventional, which is amazing. However, none of these DSCR options quite beat that portfolio, so keep an eyeball on that portfolio option. But absolutely amazing day when DSCR rates beat conventional. Absolutely amazing. 7.875 rate, 3.25 discount points and cost, but the final APR 8.017. So just a touch below conventional there, and there's even a couple other options right there below conventional. So I'd say 100% of investors will choose a DSCR loan, way less documentation, way more flexibility, especially if it's cheaper than conventional. Most investors choose a DSCR loan even when it is much more expensive than conventional. So right now, total no-brainer. If you're out there looking for investment properties, DSCR is the way to go. And if you scroll down here, there's a bunch of different options. Some of these may allow bankruptcies, foreclosures, other credit issues. Some of these may allow us to use different rental income calculations, such as short-term rents, Airbnb. So tons of flexibility here. Please get with our team to find the best one. Now let me switch my screen again, and we'll get back to our topic for today. Going back to primary homes, obviously 0% down is primary home. So go back into primary mode here. And we're going to be talking about the special programs for 0% down. So last week we went over the traditional 3% down, the traditional 3.5% down options. And now we'll go over some of the more traditional 0% down options for our primary borrowers, which obviously Jose might have a couple tricks, but typically you're looking at VA and USDA options as the typical 100% financing options, 0% down. But there are some tricks out there as well. This is not necessarily a DPA episode for down payment assistance, which would be the other way to get 0% down, but there are options out there. So Jose, if you're ready, we'll let you go ahead and present some 0% down options.
Good morning, everybody. Thank you for joining us for Daily Rates Live. Great to be with you this morning. So we do have 100% options, but I will state that some of the options that we do have are going to be DPA also, because there are different ways to get to that 100% LTV or CLTV option, right? Many ways to skin the cat. We have our FHA DPA options. We have our home possible / home ready options that you can combine with a community second to get to 100, more than 100% CLTV on that option there. So do have some good options to share with you. So let me give me a second here. And let me go go over to my proper screen. All right, ready to share these options with you. So, like we were saying, back to the basics here, right? So, our first obvious 100% LTV program is VA, right? VA is for veterans only. Uh, we are able to do 1 unit or multi-unit options as well for our house hackers out there. So our first scenario here, we have 7.625 is our lowest rate option. It's almost at par. And we can buy that down to 6.625% for our VA 1 unit, 100% LTV purchase. So now for our house hackers out there, we do have our 2 to 4 unit LTV purchase. You can go 7 point, again, no loan level price adjustments here, 7.625 lowest rate option, and 7.625 lowest cost option, 6.625 lowest rate option. And now our another 100% LTV option, this one for 1 unit properties only, is our USDA loan for our rural based properties. So you do have to go to the USDA geocoder to make sure that the property address does qualify for USDA due to location. So 7.625 does have a little bit of a lender credit, 0.338 points, and you can buy that down to 6.625 at a cost of 2.5 points. Now, USDA does allow rate and term refi up to 100% LTV as well. No cash out that is possible on this. No 2 unit, 3 or 4 unit, but you can do your 1 unit rate and term refi, 100% LTV, long as property is in a USDA location. And again, as you can see, no loan level price adjustments here. So 7.625 has a lender credit of 0.338, and you can buy that down to 6.625% rate. Now, going back to VA, we do have a 100% LTV VA option. It is very limited. VA does allow this. It is the investors and lenders out there that decide to add an overlay and in some cases limit the LTV to 90%, but VA does allow 100% LTV.
So in other words, this program didn't exist recently and now it exists again, correct?
Yeah.
100% cash out. Gotcha.
Correct. I mean, technically it didn't go away, but the overlays were not allowing anybody to do it.
We didn't have an option, basically.
Right. So now we do have an option for this 100% LTV refi. And in VA, it's always considered a cash out. So 7.125 is your lowest cost option, and 7%, not much of a rate sheet there. 7% is your lowest rate option. And now, like I did mention, wanted to throw a little bit of a twist here to 100%, getting to 100%, right? So whether you do it as 100% LTV or 100% CLTV, it is still 100%. So here we did have some positive movement in the FHA/DPA realm. It was last week, it was like 8.25 and was still costing. Right now for our repayable DPA, it is basically par at 8%. There's a cost of 0.003 points, which is for our $500,000 loan is $15. So that's pretty much par. 8% lender paid DPA. So very important for you to be aware that there is not an additional expense placed on the borrower here. to cover, since this is a lender paid DPA. 8% is our rate. You can go lower in the rate, but if you go lower in the rate, there will be a cost to the borrower. So this is
Which defeats the purpose of 0% down, right?
correct. So I try to always put it as close to meeting the objective as possible here. And then our last example is a first time home buyer, 3%, which in essence, this is now a conventional option, allows us to do the same thing that the repayable option that I just showed you. It allows us to combine some secondary financing here. We are combining a home possible. It could have been home ready. I just picked home possible. One is Freddie, the other is Fannie. This is a home possible first, and then we're assuming that our borrower is going to use a community second, which they do let you go up to. Actually, I believe it's 105% CLTV on those community seconds, even though the community second isn't going to be for 7.5% of the sales price. They do have their limits there, but the guidelines do allow you to go up to 105% CLTV on the home possible and home ready loans, so that you could get to 100% plus CLTV.
All right. I don't see any questions here. But like you said, Jose, different ways to get there, but definitely a few programs where we can get there. So, yeah, I don't see any questions. Let's go ahead and wrap it up. Remember, we do this 11 a.m. Eastern every weekday, where we go through the live rates and then do a deep dive into a different topic. So we'll be right back here tomorrow with another topic. Thank you, everybody, for tuning in. Thank you, Nick. Thank you, Jose. We'll see you all tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.
Thank you, everybody.